Hey everybody, Adam Black here at First Commercial Bank. Hope you guys are doing great today. With everything going on in the economy, thought it would be a great time to bring in a great friend of mine. Mike Petyak is with Oakmont Financial Partners and keeps his hand on the pulse of the economy. So I thought I'd invite him in and let him tell us a little bit about the economy. Mike, how's it going, buddy? Tell us a little bit about
Adam,
you and Oakmont.
Yeah, man. Thank you very much for having me on. I started Oakmont last year in 2021. I've been in the financial world since 1997. I cut my teeth with Merrill Lynch in Richmond, Virginia. Didn't know a soul in that town, and learned how to cold call and get my teeth kicked in a little bit. but that was it was a great learning experience, and I met a lot of good people.
Good deal. Good deal.
So that's where it is now. I've been doing this, like I said, since 1997, and was able to go out on my own last year with Chad Barber, and we started Oakmont Financial Partners as our firm here in Ridgeland.
Yeah, I know Chad. I didn't know that actually.
Yeah.
Good dude.
Oh, absolutely.
Well, man, let's get right into it so we can keep these quick. Tell us what's going on, current state of the markets. I know there's all kinds of crazy news out there depending on what channel you watch. So give us the real deal.
Man, I've been on a ton of calls, and because of things changing so quickly, I try to stay on top of things. So I listen to a lot of different analysts from all the different investment management firms. The Fed's not going to stop until they bring this inflation down. I mean, that's pretty much their objective. It's like we're at year over year CPI of about 8. Inflation's running pretty hot. Their goal is 2, and they're going to keep raising rates until they reach a certain point. Now, the terminal Fed rate now is somewhere north of 5, just north of 5. So we've got a little ways to go on that. If they're raising rates now, will they continue to do it at the pace that they have been? There's a good chance that they could slow down, and that's what we're hoping on. But with some parts of the economy still fairly strong, they will probably keep their foot on the gas just a little bit longer. And then once they reach their mark, doesn't mean they'll start bringing it back down. They could sit there for a while. So the risk of a recession right now, and I know that, people out there, we had those 2 negative quarters of GDP already. And, that's doesn't typically mean that there's a recession when you have 2 consecutive quarters of GDP. Some folks had said that. It feels like it sometimes, but we're not quite there. The next quarter, third quarter, was a positive 2.6 GDP. Now, most of that was driven by a reversal of trade deficit. So when you factor in consumption, you factor in investment, you factor in government spending, and then you have the net trade, it comes in at 2.6. Well, 2.8 of that was net trade. So you got to think the other ones accounted for negative 0.2 of those reports. So, there's some, looking under the hood of all these numbers is really where we need to be focusing on, not just the top line number.
So 2 things you just said, and we hear this a lot in the news, is CPI, GDP. Layman's terms, what are those 2 things?
The consumer price index is, just the price of goods, going up. You see CPI is energy, new and used vehicles, restaurants, hotels, transportation, food, shelter. Those are parts of CPI that you can look at. And everybody has felt the pain of parts of that or all of that increasing over the last year.
Okay.
Gross domestic product is just the growth of the economy. Are we still growing at a positive number? Are we contracting? Are we slowing growth? You can say from the numbers that we're definitely slowing. Parts of that is consumption, is consumer spending. That's slowing at a pretty good clip. People have burned off a lot of that COVID savings. Yeah. And so that consumer spending is really going to be a portion of that's going to slow down a good bit here pretty soon.
And that's what we want, right? We want to kind of slow things down.
Yeah, that's the whole point of them raising rates is the Fed raising rates is to slow the economy down, because we're running pretty hot for a while. So it takes unfortunately, I think we ran at those lower rates for too long.
Uh-huh.
And then you throw in the pandemic, you shut everything down so that there's no production, and then you infuse a whole bunch of cash into the economy. So now you have a large number, excess number of dollars chasing not many goods and services because it's not being produced. So that creates a fair amount of inflation right there.
So am I right on the Fed rate? And every time the Fed raises their rates, somebody texts me and go, "Hey, I saw mortgage rates are going up." And I go, that's not mortgage rate, that's Fed rates.
That's correct.
Am I right that the Fed rate is really the rate that the central banks, which are the banks that the Fed controls, are lending to community banks or regional banks on an overnight basis? That's kind of right? Is that
basically, yes? So the Fed rate is the banks have to keep a reserve in cash amount, right?
Okay.
Some banks have a excess reserve and some banks do not have the excess reserve. So in order for the banks that are in a deficit of that reserve requirement, they'll go out and borrow it from one that has a excess reserve.
Okay.
Okay. And that's the rate that's being charged.
And that's the rates being charged.
That. Yep.
Okay, cool. Nan, one other question I thought would be a great one while I had you on. What's some good advice for young professionals just starting out in their career as far as setting themselves up for retirement in a good way?
Man, I tell you, as long as take advantage of your employer sponsored plan. That's the number one thing I could say is if whatever that maxed out contribution is, whatever you're to get the full employer match, whatever that is, take advantage of. That's free money.
Yeah.
So if you put in, your employer says to put in 5% and we'll match it 4%, okay, that's 9% that you have going to your retirement right there. Only half of it's yours.
Yeah.
So to take advantage of that. Now, how you invest, it's up to you. I can't give that advice. You have to speak with either me privately so I can understand your situation or your financial professional, but just to be a part of that is very critical. Another thing that I think is pretty important is setting yourself up early with life insurance. There's always offered through your employer, but sometimes that's capped out at 4 times salary or something like that. And it's not portable. So if you leave that employer, you may go to another one who may not have the same type of benefits. And now you don't have it. And if you've got a young family, that becomes pretty important when you've got car notes and mortgages and whatnot. So insurance can be fairly cheap. Today is the cheapest you're ever going to buy insurance, because tomorrow as you get older, obviously it's going to get more expensive. And buying convertible term for someone in their 25 to 35 years old can be pretty affordable and allows you to lock in your underwriting, assuming you have great health and your early age. Lock in your underwriting now so that when you can convert it to a permanent policy later at the same underwriting class at whatever premium that would be at that age.
Oh, okay.
So how that becomes a benefit is if you're healthy now and you buy a term policy of say 20 years, right? And you get down the road 15 years and you have some sort of illness, well, you can convert that to permanent at your original underwriting rate. Okay. So it's kind of, you can buy term now, save yourself a lot of money. Once you advance in your career, if you're finding that you still need it, you can always convert that to permanent later on.
Okay. So get started early on 401ks or whatever retirement plan your company offers, and get started with life insurance early on as well. So you're getting
I think those are two easy things to fit into a budget while people are still trying to figure out, can I afford this? Can I afford that? Those won't eat up a ton of your budget at all.
Cool. Good deal. Man, look, I told you I wouldn't keep you long. I know you're a busy guy. Probably touch back base with you in a couple of months and with a couple more questions and keep doing these, man. Hope this economy turns around quickly. So if you got any insider trading tips or anything you can help me out on, just send those to me.
I have none of those.
Hey, man, always great to see you. And I really appreciate you coming on with me.
All right, Madam. I thank you very much. Thank you.
All right, buddy. Take care.
Bye.